Floor Show traders. From London, we have Avatrade Chief Market Analyst Naeem Aslam, and back here on this side of the pond, Sarge. Of course, Sarge Guilfoyle, Great Hill Capital's Tom Hayes. Let's start with Naeem. European markets, Naeem, which were open for trade today, had to deal with the same headlines that we're going to deal with tomorrow. So they closed higher. With a backdrop of global inflation, and we've got a hawkish Fed, obviously, dovish China, what are investors seizing upon, and what did you see in trade today that gives us an indication of what will happen tomorrow?
Sure. Thanks for having me. So first of all, one thing which is very, very clear, the markets are oversold and bargain hunters really trying to find that opportunity. So given the fact that markets are oversold, it's very natural to see the kind of a price action that we have seen today. However, there are a number of concerns which we believe really going to matter for investors and traders as this particular week unfolds. That's number one, disparity of central banks. As you correctly mentioned, dovish, PBOC, and then hawkish Federal Reserve.
Right.
Secondly, eroding disposable income, soaring inflation. These are the factors that investors and traders are going to pay very, very close attention to, and not to mention the noise, which you earlier mentioned, meaning different Federal Reserves coming up and then giving their views of the market, how much interest rate is really going to be still okay for the Federal Reserve to do that, despite the fact that we are seeing enormous amount of a weakness heading towards the U.S. economy.
Well, you know, Naeem is right, Sarge. You look at exactly what's going on. There is so much fear. Is it now time to be picking up some of these names at huge discounts? I find it really interesting. You have Goldman Sachs coming out and saying they have a list of stable stocks. And what they do is they bring at this, and I know how you just love when I quote Goldman Sachs, because we know they've been wrong on many occasions. They've been right on some, but the high Sharpe ratio names, okay, this is what they call it. And they say that names like Dish are stable. Whatever their reason, I don't know. Dish, Royal Caribbean, they like Walmart. They feel that the ICE exchange is good. Dexcom, Alaska Air, Industrial. So you tell me, do you agree with anything like that? And they don't even like NVIDIA. They didn't pick NVIDIA. I believe they picked Micron as their big chip name.
Yeah, I think Goldman has the right idea. I don't think their execution is really all right, but I think they have the idea of setting up different baskets, and that's pretty good.
Okay.
All right. While we have a recession in place, it's already here. None of this, we might have a recession. It's the second quarter. We are in recession.
So Bullard's wrong. Bullard says we're not going to have a recession, and so does President Biden.
No, I told you 5 weeks ago on this show that I guaranteed an imminent recession, and I'm about this close to being right. Okay, so I think we're right there. Now, June, however, the end of June is shaping up pretty nicely. All right, we are oversold, as the gentleman in front of me said. We do have probably right now, equities are underperforming bonds, although bonds are doing pretty poorly. So we probably have an end of month, end of quarter, end of half year pension rebalancing that will favor equities. We do have something of a twist on that. Okay, we also have the Fed stress test this week. Don't forget that. So I have one basket, which is going to be my money center banks and my high beta revenue growers. That's just for this next week to 2 weeks. All right, that's going to be my Wells Fargo, my Bank of America, some of my semiconductors, and a few of my leftover software names. But for the rest of the year, I think it's really going to be tough. I think the economy is going to be tough. I think jobs are going to be lost, and the consumer is going to have a tough time. So for the rest of the year, we want to go low beta, and we want to go dividend payers. So that's going to be your staples like Pepsi, Procter, those kinds of names, and your defense contractors, because although we don't like to say it, war is good business. And Lockheed, Raytheon, Northrop Grumman, and General Dynamics are going to do good business.
Well, we're a business network, and yes, we know the horrors of war, and you certainly do, having served. But again, we want to give our investors ideas. And Tom, to that end, as you look at exactly what's happening at the moment today, which piece of all of the news we've just outlined do you think that investors should focus upon before they make their trades tomorrow?
Well, I think, Liz, Bullard is correct that we may expand more than people expect.
Okay.
This has been a multiple recession more than an earnings recession. If you look as of Friday, consensus S&P earnings for next year are still at 251.76. They may come down, but we're trading at 14.5 times next year's earnings. with 150 on the Fed funds rate going to 225. So that's still relatively low. It's below the 18.6 times, which is the 5-year average, which included the last tightening cycle. Warren Buffett said in 2009, those who invest only when commentators are upbeat, they pay a hefty price for meaningless reassurance. So, when you've got the market down like this, you got to nibble. You look at some of the high quality businesses that are on sale, Liz. You don't do it all at once, but look at Home Depot down 35%. Are they going to generate more cash or less cash 3 to 5 years from now? Meta Platforms down 58%.
Oof,
Mark
tough.
Zuckerberg, he always figures it out one way or another. And Disney's down 53.6%. Are more kids going to go to the parks 3 years from now or less? More people going to sign up for the streaming or less? And finally, Starbucks is down 42% because of the China overhang. But China's reopening. They're stimulating like crazy, as Naeem pointed out. So there are things to do. You don't do it all at once. You build up over time. But I think the mass pessimism over the weekend may be slightly unwarranted.
Well, now you're talking like Buffett. Gentlemen, great to have you on this Monday. Again, we have so much news. We are right here just because the U.S. had a federal holiday. There is a headline every 5 seconds that we have discovered today that could affect trading, and we think it's really important to make sure that we get that to our viewers. So we thank you.